What is going on YouTube? This is Trigger Happy Trader coming at you with another video here today. We're going to be going over GameStop, GameSTONK. Elon Musk started it. Elon Musk said GameSTONK. The stock had a delta squeeze, and now they're saying, historical gamma squeeze is next. Roaring Kitty has subliminal messages in his interview with the SEC, saying hang in there in the background. As you guys can see here, he can't go ahead and tell you to buy the stock. He's been preaching it since 2018. And he was a part of the delta squeeze. He will be a part of the gamma squeeze. He will be part of the new world order. And if this all indeed does happen, so I have a thread that I want to share with you guys. If you guys don't want to hear me read it, go ahead and skip to the end of the video where I'm going over the technical analysis, and we can see kind of where GameStop will be heading. So I'm going to go ahead and get started. We have Rock God here saying people talked about GME a whole bunch in January, but I don't think you realize just what is happening in the market and how this one stock could result in the greatest transfer of wealth in human history. So I give you this thread. Why is GameStop a game changer? It begins with the fact that retail is dying. People buy things online. Games can now have downloadable content, and you just don't need to buy the disc or cartridges anymore. So people don't visit the store often. The storefronts are tired, and the 20-year-olds and profits were spent on buying back $30 of a stick to keep the price from dropping so much that they get delisted. They went from 100 million shares to 70 million shares, 20 million shares of which are owned by insiders and can't be freely traded. Then about 35 million of the remaining 50 million shares are owned by big investment and index funds, while the remaining 15 million shares are owned by retail investors. Average folks like you and me who are too poor to be invited into the hedge funds will put these shares in their meager portfolios or their 401ks. It is important that you remember that there are only 15 million shares that can be traded. Now, to stay afloat, GameStop issued some bonds, and their first being set of bonds. Imagine they took out a multi-million mortgage on their entire business, scheduled to mature to do so in the next week or so. This was posted yesterday. Today's the weekend. We're going into next week. So sometime last year, some hedge fund bros saw GameStop struggling, then got hit with the pandemic and decided it was time to short out of the stock and become quadrillionaires. They borrowed the stock, millions of shares of it, from the index funds and then sold it, expecting the price to crater and then scooping it up for some cheap shares and giving it back to the people that they borrowed from them. If GameStop were to go bankrupt and they wouldn't even need to give back the shares or even declare capital gains, billions of profit and tax-free. So essentially hedge funds were trying to cheat the game and make billions of profit tax-free. So fully expecting GameStop to default on their bonds, they shorted, and they borrowed more and they shorted, and they borrowed more and they shorted, and they borrowed more and they shorted. But who was buying the shares? Regular dorks like us. Retail investors were buying and hoarding the stock. By January, the shares of GameStop had been shorted something like 140%. How does this happen? Well, once a stock is borrowed and shorted, and someone like me buys the shares, I would get counted as an owner, and the funds which the shares were borrowed get counted as an owner too. Then the stock sits in my brokerage account, and my broker lends the stock to the hedge fund, and he shorts it again. So someone bought the shares, and they counted as an owner. I'm counted as an owner. The index fund is counted as an owner. Before long, this has gotten out of control, and the index funds want their shares back, but the price of the stock had risen above what the hedge funds had shorted it for, and retail owners refused to sell it. This is called the short squeeze. So that was the delta squeeze, and the result from the stock went from $2 to $480 in a year. It wasn't that GME generated business that warranted such a high price, but the fact that the hedge funds got out of their skis and their greed hoisted their Peter. 11 hedge funds went bankrupt, and the biggest, Melvin Capital, was down 53%. The stock fell and bottomed out at $40 a share, but it wasn't done. More hedge fund loans were due, and they had to buy back the stock and give it to their lenders. So the price spiked again last week to around $200. This caused a new problem: options markets. Options are weird to the average person. Basically, we have a stock in a 100 shares block and sell options to buy, known as call options, where the right to buy the stock at a set price in the market for it to go up. For example, an options writer makes an out-of-the-money option for GME back in Christmas for $80 a share that has a date of February 26. This means that if someone buys an option for $1 a share for 100 shares, and by February 26 the stock is at $80, they can exercise the option and they get all 100 shares for below market value at $80 a share. The options writer must sell those shares or else. Well, the stock is trading at $20 a share, and the option writer sells an $80 call option that they don't actually own the shares, because who expects a stock like GameStop to shoot 300%. This is called a naked option, and the options traders now has to find shares to fulfill the order. The problem is that they only get paid $81 per share, and last Friday the shares were at $100 each. So the option guys were hemorrhaging money because the stock went from $40 to $100 in 3 days, and the contracts due on the 26th of February from $100 on down were now in the money. And on top of this, a whole bunch of short sellers were doing naked shorts, meaning they were selling stock that they do not have on promise that in 2 days that they will find the shares and deliver them, betting the price would drop and they would find the cheap shares to fulfill their orders. As it stands between shorts, and naked call options, the rich have to find something in the neighborhood of 200 to 500 million shares in order to fill these orders. There are only 50 million physical shares in existence, all now in the hands of retail investors who are refusing to sell, and millions of naked shorts from call options will be in the money. Come tomorrow afternoon, if the price remains above 100, which this was yesterday, and it did remain above 100, every evening after the market closes, the brokers do some accounting in the clearinghouse and with the clearinghouses. They even their books and see that X number of shares move from here and Y dollars move from there, and sometimes they find that 3 million shares are supposed to move from the hedge funds accounts to move from a hedge fund account with brokerage A to accounts with brokerage B, but the hedge fund account with brokerage A only has 2 million physical shares to give. This is known as a failure to deliver, FTD. So brokerage A looks at their accobits and see that there are another million shares owned by their customers and loans these 1 million shares to the hedge fund to give to brokerage B. And A's hedge fund account has 21 days to find the million shares or else. This or else is big because if 21 days pass and the hedge funds haven't found the shares, brokerage A is required to liquidate the hedge fund's assets and buy the stock at a price to fulfill their obligation, at any price. If the retail investors demand 1 million a share, then brokerage A has to pay 1 million a share to liquidate. 1 million a share of hedge funds assets to pay for. The same goes for option writers. If they go 21 days from when they sold the shares and don't deliver, they now have to liquidate assets and pay any price for the shares. And they have to do this in hundreds of millions of times because remember, there are 200 to 500 million naked synthetic shares out there, but only 50 million physical shares in existence. They don't know if they will get physical shares or synthetic ones when someone offers to sell, but they have to keep buying until all orders are fulfilled. Hedge funds and entire option markets will go bankrupt. If there are 500 million shares bought at 100,000 each, then these groups will have to come up with 50 trillion. No one has that kind of money, so they will liquidate pit of existence. They will be liquidated pit of existence, and then the instances companies and the clearinghouses themselves will have to start buying the shares with their $63 trillion insurance fund, which is basically just the Federal Reserve printing money. The entire global economy is about 87.8 trillion, and for a brief few days, Jimmy has the power to not only be a $7 trillion company making Ryan Cohen possibly the world's first trillionaire, but essentially see almost all the cash on top of the earth go to the fulfilling of a bunch of bets of a bunch of douche bros made to filter into the hands of poor schlubs from Reddit who call their bluff. Something like 63 multi-billion hedge funds could face annihilation. It takes 1 million in liquidity and a yearly salary of 200K or more to invest into most hedge funds. Much of the 1% is about to lose their wealth to a bunch of potty mouth degenerates from the internet message boards, and the fear is palpable. Thus, possibly the greatest transfer of wealth in human history is days or weeks away. So this was posted yesterday at Barack God, and if like I said, Roaring Kitty has the subliminal message in there, hang in there. He's been saying this since 2018. Clearly he's onto something. He killed his interview with the SEC. If you guys want to go check that out, but I could post a link in the description below so you guys can watch it. It's really interesting. But he says he likes the stock, and the squeeze is not Squoze. And as you guys can see here, this was the Delta squeeze going from around $2 in September to the Delta squeeze here in January, going from $20 to about $500, and now we're breaking our line again. Someone clearly reloaded, and during the market's worst week, in the past month, like 2 months or so, was completely green all week, which is very interesting to see. And I mean, if they're predicting, that Ryan Cohen's the first trillionaire, and that GameStop Gamma squeeze hasn't happened, and that it could be valued at $7 trillion. Even if it's for a couple days, the risk reward here is worth it to me. I definitely own a couple GameStop just to see what happens. Luckily, getting in, under $100, and so, like I said, like the risk reward is worth it. The worst thing that could happen is I lose a couple $1,000s, but the reward could be life changing. So something that I just wanted to share with you guys. Hopefully you guys did enjoy the video. Please drop a like and subscribe if you did. I'm going to be busting out a couple videos here over the weekend on stocks to buy now that the correction has happened. A couple SPACs that I'm heavily looking into for the long term. So if you guys do enjoy the content, like I said, drop a like and subscribe. Hope you guys enjoy. Big fight night tonight, UFC. Hope you guys are tuned in. Should be incredible. So peace and love, baby.